Welcome back, everybody, to a new deep dive. And today we're going to be tackling Tony Robbins' Unshakeable, your Financial Freedom Playbook. It's really more than just a roadmap to building wealth.
Yeah,
It's a guide to building a mindset where
absolutely.
you feel,
Yes.
well, unshakable
Yeah.
about your financial future.
Yeah. I'm really excited to kind of dive into this with you because I think Robbins does a really good job of cutting through a lot of the noise and just giving a clear path forward for a lot of folks who feel overwhelmed by the world of finance.
Right. And one of the things that really kind of hit me right off the bat was how he talked about compounding.
Yeah.
And he doesn't just like throw the word around.
Right.
He tells the story of Joe and Bob.
Right.
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 They're both investing, but Joe starts at 25.
Yep.
Bob starts at 35.
Right.
And by 65, Joe's made way more money,
Way more.
even though he put in less money overall. Yeah.
Yeah. And that's the beautiful thing about compound interest is that it really is like a snowball effect.
Yeah.
The earlier you can get started, even with small amounts, the
Mhm.
more time those returns have to generate more returns.
Right.
And it's not about getting rich quick schemes. You
Yeah.
know, this is about consistent growth over time.
Yeah. And he really emphasizes the stock market as being like a key to this long-term compounding. But,
Yeah.
of course, the market can be scary,
Yeah.
especially with all the ups and downs.
Well, and this is where Robbins gets into what he calls market seasons.
Okay.
So you can almost think of it like whether, we have periods of growth and then we also have those corrections and
Mhm.
crashes and he really kind of normalizes this for people, helps them understand that like this is natural.
Yeah.
This has been happening for over a century. And knowing that they're part of the cycle can really help you just make more rational decisions
Right.
rather than reacting out of fear.
He actually calls them freedom facts.
He does.
Just these little nuggets of knowledge to help us stay grounded. Like,
Yeah.
did you know that corrections have happened almost every year since
Yeah.
1900?
It's true. Yeah, and on average, those bear markets, the big downturns, they only last about a year.
Oh, wow.
And the growth periods, those bull markets, they tend to stick around much longer. And in fact, Robbins has this character, Mr. Hapless, who has like the worst market timing imaginable,
Right.
but still ends up making a profit
Yeah.
because he stays invested for the long haul.
So what I'm hearing is that trying to time the market is basically impossible.
Yeah,
The real risk is staying out of the market.
it is.
But once we're in how do we choose the right investments to kind of weather those storms?
Well, Robbins is really clear on this one. He is not a fan of traditional mutual funds.
Okay.
He really dives into how the fees they charge, even if they seem small, can really eat into your returns over the long term.
Oh, wow.
He actually uses another example, Joe and David. This time, they're both investing the same amount, but because of those fee differences, one ends up with hundreds of thousands of dollars more in retirement.
Wow. So mutual funds are out. What's the alternative? Index funds.
Exactly. Robbins is a huge advocate for index funds. They track a specific market index, so you're not relying on somebody to pick
Yeah.
winners and losers. And this keeps the fees super low.
Right.
They're more tax efficient, and you get instant diversification.
This almost sounds too simple. What am I missing?
There's no catch, really. Robbins' argument is that index funds take a lot of the emotion out of investing. You're not constantly
Outside.
trying to guess the market's next move.
Right,
You're
yeah.
simply riding the wave of long-term growth.
Right.
It's about control. You can't control the market, but you can control your fees, you can control your strategy, and you can control your own behavior.
Okay, this is making a lot of sense. But what about finding an advisor? Do we even need one if we're going with the index fund route?
Well, Robbins really stresses that even if you're a DIY investor,
Okay.
having a trustworthy financial advisor can be invaluable. But it's not about finding any advisor, it's about finding a fiduciary.
Okay.
And that's somebody who's legally obligated to put your interests ahead of their own.
Wait, aren't all financial advisors like that? I thought that was a given.
Unfortunately, it's not. A lot of them operate under different standards,
Oh,
and their incentives might not be aligned with yours.
gotcha.
Robbins talks about this fiduciary quadrant, and it really shows that even among fiduciaries, there are different levels of expertise and commitment to the client's well-being.
Okay, so fiduciary is the first box to check. What else should we be looking for?
So Robbins gives us 5 key criteria. First, they should have solid credentials, like being a certified financial planner or some similar designation.
Okay.
Second, their fee structure should be totally transparent, no hidden surprises or anything like that.
Makes sense.
Third, they should be invested in those same principles that we've been talking about, low cost.
Right. Diversified strategies.
Okay, so not just any fiduciary will do.
Yeah.
What about the last 2 points?
Yeah, so the last 2 are about fit and security. You need to feel comfortable with this person.
Okay.
You need to feel like you can communicate openly with them.
Right.
And that they really understand your values. And then lastly, make sure they use a third-party custodian for your funds.
Okay.
And that means that even if something happens to the advisor, your money is protected.
Okay, this is all great practical advice, but let's be honest, even with the right knowledge and the perfect advisor, our emotions can get in the way.
They do.
How does Robbins address that?
Well, he dedicates a big chunk of the book to mastering your emotions and avoiding psychological traps. And he talks about things like confirmation bias, where we tend to seek out information that confirms what we already believe, even if it's wrong.
Oh, I am totally guilty of that. I get stuck in my own little echo chamber sometimes.
Well, it's a natural human tendency.
Yeah.
But in investing, it can lead to holding on to losing investments for too long or missing out on opportunities because they don't fit our preconceived notions.
Right.
Robbins even tells this great story about Warren Buffett being willing to change his entire investment strategy based on his partner's dissenting opinion.
Oh, wow.
So being open to different perspectives is crucial.
So being open to different perspectives is crucial.
Yeah.
What about other emotional pitfalls?
Well, overconfidence is another big one. We think we're better at predicting the market than we actually are. It's that I can time it perfectly mentality.
Right.
And Robbins suggests index funds and diversification as a way to combat this. You're essentially acknowledging you don't have a crystal ball.
Right.
Yeah.
It's like building a safety net for your own psychology.
I love that.
But at the end of the day, is all this just about having a lot of money? Robbins seems to be just saying there's more to it than that.
You're absolutely right. He really drives home the point that true wealth goes beyond just your bank account. It's about emotional well-being, finding fulfillment, being in what he calls a beautiful state rather than a suffering state.
Right. And he actually uses the story of Robin Williams,
Yes.
who, despite achieving incredible success and wealth,
Yeah.
ultimately struggled with depression.
Yeah.
It's a reminder that money alone doesn't equal happiness.
Yeah, and he actually breaks down those triggers that lead to the suffering state.
Okay.
And it's when we get caught up in loss,
Okay.
less
Right.
and never, we fixate on what we've lost. We feel less than others,
Yeah.
or we get stuck in the belief that we'll never achieve what we want.
These are such common human experiences.
They are.
What does he suggest we do about it?
Well, Robbins talks about the power of shifting our focus.
Okay.
Choosing to be present and finding things to be grateful for. He even introduces this 2-minute gratitude meditation, a simple tool to help cultivate that beautiful state.
I love that. It's about finding joy in the journey, not just the destination. I'm feeling pretty inspired, actually. Where do we go from here?
Well, Robbins' business partner, Peter Millick, shares some fascinating insights about navigating turbulent times,
Okay.
specifically drawing from the 2008 financial crisis.
Okay.
And that's where we'll pick up next.
Awesome. I can't wait.
Yeah. And what's really remarkable is that Peter Millick's firm not only survived the 2008 crash, but they actually thrived during that period.
Wow.
And Robbins shares how they did it.
That's incredible. I mean, most people were just trying to hold on for dear life back then.
Right.
What was their secret? Did they have some kind of crystal ball?
It wasn't magic, but it does show the power of a solid strategy.
Okay.
Millick emphasizes 2 key things: asset allocation
Okay.
and what he calls conservative positioning.
Okay, so asset allocation, that's about spreading your investments across different types of assets, right? Like stocks, bonds, real estate, that kind of thing.
Exactly. It's like building a diversified portfolio, but with intention.
Right.
Each asset class reacts differently to market conditions.
Okay.
So when one area takes a hit, others might hold steady or even go up.
Okay.
It's about mitigating risk, not putting all your eggs in one basket.
That makes sense. And what about this conservative positioning?
Yeah.
Does that mean being like super cautious, like keeping everything in cash?
Not necessarily. It's more about having enough liquid assets or steady income to cover your expenses.
Right.
even if the market takes a dive.
Okay.
That way you're not forced to sell investments at a loss just when you need the money most.
So it's kind of like having a really robust emergency fund,
Yes,
but on a larger scale.
exactly.
It's about having that safety net
Yeah.
so you can ride out the storms without panicking.
Exactly. Peter uses this great analogy. He says it's like making sure you have safety harnesses, life vests, and enough food before heading out to sea.
Right.
You can't control the weather, but you can be prepared for whatever comes your way.
This really aligns with that whole do not lose principle that Robbins talks about.
Yeah.
It's not just about making money. It's about protecting what you've already earned,
Yeah.
especially during uncertain times.
Right. And part of that is understanding that, market ups and downs are simply part of the game.
Right.
Peter tells this story about the S&P 500 dropping 11% in a single month back in 2016,
Wow.
only to rebound just as quickly.
Okay.
And when Robbins asked another investing legend, Howard Marks, about it, Marks said there was no real reason for either the drop or the recovery.
So sometimes the market just does its own thing,
Yeah.
regardless of what's happening in the world. That's a bit unsettling, to be honest.
It definitely highlights why trying to predict short-term movements is a fool's errand.
Yeah.
But the good news is that over the long term, the stock market tends to reflect the overall growth of the economy.
Okay.
As businesses become more profitable, stock prices go up.
So even with all the craziness, the overall trend is upward.
That's been the historical pattern. Yes. And that's why people like Warren Buffett, remained optimistic even during the 2008 crash. He saw it as a buying opportunity,
Right.
a chance to get a piece of America's future at a discount.
Wow. That takes a lot of courage and conviction to kind of go against the tide like that.
It does.
But it sounds like the takeaway here is to avoid panic selling when the market dips.
Yes.
Stay focused on the long game.
Exactly. And remember, diversification is key, not just across asset classes, but within them too.
Okay.
Don't just limit yourself to large cap stocks.
Oh, yeah.
Explore mid cap, small cap, even international stocks.
Right.
It's about having a well-rounded portfolio.
It's like making sure you're getting all your food groups, not just surviving on bread alone.
Right.
Speaking of which, I was surprised that Peter Mullick isn't a fan of gold as a core investment.
Yeah.
I always thought it was considered a safe haven.
It's a common misconception.
Yeah.
While some people see it as a hedge against economic chaos, Mullick and Warren Buffett, for that matter, argue that gold doesn't produce any income.
Right.
And it isn't a critical resource for anything.
Okay.
Robbins even quotes Buffett saying,
Gold gets dug out of the ground, we melt it down, bury it again, and pay people to stand around guarding it.
Yeah, it's true when you put it that way. It does seem a bit silly. So if gold's not the answer, what does Mullick suggest for the foundation of a well-diversified portfolio?
He's a big proponent of using index funds as the core, especially those that track the U.S. and international stock markets.
Okay, so we've talked about the advantages of index funds, low fees, tax efficiency, instant diversification. It sounds like they really check all the boxes.
They do. They allow you to capture the long-term growth of the market without all the headaches of trying to pick individual stocks or time the market perfectly.
Right. But even with the right investments, how do we actually avoid making those emotional mistakes that can derail our plans?
Right.
It's easy to get caught up in the fear and greed of the moment.
It is, and this is where the psychological aspect of investing comes in.
Right.
And Robbins offers some really practical tips for making smarter decisions.
Okay.
One that stood out to me was the idea of creating an investment success checklist, a checklist like a pilot uses before takeoff.
Yeah.
I love that. What kind of things would be on it?
Well, he actually worked with this legendary hedge fund manager, Paul Tudor Jones, to develop one.
Wow.
And one of the criteria that Jones included was that before making any investment, he had to establish that it was a hard trade,
Yeah.
a trade that not everyone would be willing to make.
That's so smart.
Yeah.
It forces you to really challenge your assumptions
It does.
and think outside of your comfort zone. It's
Yeah.
like getting a second opinion from your more rational self.
Exactly. And Robbins also suggests, actively seeking out qualified opinions that differ from your own.
Okay.
Surround yourself with people who are willing to ask tough questions and poke holes in your thinking.
Right.
It's about having that humility to admit you don't know everything.
That makes me think about how Warren Buffett has his partner, Charlie Munger, who often plays devil's advocate.
Yes.
Even the greatest investors need someone to challenge their biases.
Absolutely. It's about having that checks and balances system in place. And Robbins also warns against the dangers of overconfidence, especially when the market is doing well.
Right.
It's easy to get swept up in the hype and think, good times will last forever.
He quotes Buffett again on this, saying that investors project out into the future what they've most recently been seeing.
Yes.
So basically, we tend to assume that recent trends will continue, whether it's good or bad.
It's like driving by looking only in the rearview mirror.
Right.
And that can lead to, either irrational exuberance or excessive pessimism.
Right.
Robbins suggests sticking with those index funds and diversification as a way to stay grounded.
Right. It's about admitting that we can't predict the future.
Right.
And embracing a more systematic, disciplined approach.
Absolutely.
What other advice does he give for kind of keeping our emotions in check?
Well, he actually recommends limiting your exposure to financial news and all the noise that comes with it.
Okay.
Checking your portfolio too often can actually be detrimental because it magnifies the short-term fluctuations and makes it harder to stay focused on your long-term goals.
He even suggests checking your portfolio only once a year.
Yeah.
And avoiding financial TV altogether.
Yeah.
It's pretty radical, but
Yeah.
I can see how it would help reduce anxiety and that temptation to make impulsive moves.
It's about shifting your mindset from a trader to an investor.
Okay.
And speaking of mindset shifts, Robbins also talks about this tendency towards home bias,
Okay.
where we favor investments in our own domestic market,
Right.
even if there might be better opportunities elsewhere.
I've definitely noticed that.
Yep.
We tend to stick with what's familiar,
Yeah.
even if it's not necessarily the best choice.
It's like only eating at the same restaurant because you're comfortable with the menu,
Right.
even if there are other amazing culinary experiences out there.
Exactly.
Robbins encourages us to think globally,
Right.
to explore the whole world of investment opportunities.
It's about being open to new possibilities and challenging those ingrained assumptions we might have.
Yeah.
But, beyond all the practical investment advice,
Mm.
what really struck me about this book was how Robbins elevates the conversation beyond just money.
He really does. He makes a powerful case for the importance of emotional, psychological, even spiritual well-being as part of true wealth.
Right. He tells the story of Robin Williams again,
Yeah.
reminding us that fame and fortune don't guarantee happiness.
Right.
It's a sobering thought.
It is. And Robbins really breaks down, those thought patterns that can lead to unhappiness.
Yeah.
He talks about how getting caught up in loss less and never
Yeah.
can create this negative spiral in our minds.
Laugh less, never. I think we can all relate to those feelings, even if we're not aware of them consciously.
Right. We dwell on what we've lost. We compare ourselves to others and feel inadequate.
Right.
Or we convince ourselves that we'll never achieve our dreams.
Yeah.
Robbins encourages us to, recognize these patterns and make a conscious choice to focus on what we're grateful for.
Right. To be present in the moment.
Right.
And to find joy in the journey.
It's about cultivating that beautiful state he talks about.
Yes.
Finding fulfillment, even amidst the challenges of life.
Exactly.
And gives us some concrete tools to help with that.
He does.
Like the 2-minute gratitude meditation.
Yes.
It's a simple practice, but it can be incredibly powerful in shifting our perspective.
Absolutely.
I love that. It's a reminder that we have more control over our thoughts and emotions than we sometimes realize.
We do.
This has been such an eye-opening conversation. We've covered a lot of ground.
Yes, we have.
From the nitty-gritty of index funds to the profound power of gratitude.
It has been quite a journey.
What else does Robbins have in store for us?
Well, he doesn't stop there. He goes on to discuss some important aspects of estate planning.
Okay.
Making sure that your wealth is protected and passed on according to your wishes.
Right.
It's about creating a legacy, not just for your loved ones, but for the causes you care about.
This sounds like essential information, even if it's not the most exciting topic to think about.
Oh.
I'm ready to dive in. Okay. So we've talked about building wealth and making those smart investments and even mastering our emotions. But what about protecting what we've earned?
Yeah, that's where estate planning comes in. And it's not just for the super wealthy.
Right.
It's about ensuring that your wishes are honored and your loved ones are taken care of no matter what happens.
To be honest, I've always kind of avoided thinking about this stuff. It feels a bit morbid,
I get it. It's not exactly, a fun topic to think about.
Right.
But Robbins and Maluk really stress the importance of having a will in place, regardless of your age or your net worth.
Yeah.
If you don't have one, it's the state that decides how your assets are distributed.
Oh, wow.
And that might not be what you want.
That's a good point. I wouldn't want to leave that up to chance. He also mentions minimizing estate taxes. I guess that's more of a concern for higher net worth individuals.
It can be, yes, but there are strategies to mitigate those taxes, like utilizing the lifetime exemption and setting up trusts.
Right.
It can get a bit complex, but the key is to have a knowledgeable estate planning attorney on your side.
So it's worth seeking out expert advice.
Yeah.
What about for those of us who aren't exactly millionaires?
Yeah,
Is there any point in having a will if we don't have a ton of assets?
absolutely.
Yeah.
Even if you have modest assets, a will can make things much easier for your loved ones.
Okay.
It's about clarity and peace of mind.
Right.
And Robbins also highlights the importance of having a durable power of attorney for healthcare.
I've heard of that, but what exactly does it do?
It allows you to designate someone you trust to make medical decisions on your behalf if you're ever unable to do so yourself.
Right.
It's about ensuring that your wishes are respected even in difficult situations.
That's something I hadn't really considered before,
Yeah.
but it makes sense to have those things in place just in case.
Right.
Speaking of just in case, Robbins and Maluk also talk about insurance as another layer of financial protection.
Yes. They emphasize the importance of having adequate life insurance,
Oh, yeah.
especially if you have dependents who rely on your income.
Right.
They recommend term life insurance as the most cost-effective option for most people.
I've always been a little confused about the different types of life insurance. What's the advantage of term life?
Well, it provides coverage for a specific period like 10, 20, or 30 years.
Okay.
And it's much more affordable than permanent life insurance.
Right.
And for most people, that's all they really need.
Okay, what about other types of insurance?
Well, they also mention disability insurance, which can replace a portion of your income if you're unable to work due to illness or injury.
Right.
And long-term care insurance, which can cover the costs of assisted living or nursing home care expenses that can really add up.
Right, so it's like building a safety net for all kinds of potential risks. It's not just about protecting your wealth, it's about protecting your future and your family's well-being.
Exactly. It's about taking a proactive approach to financial security. And Robbins doesn't stop there. He also encourages us to think about how we can use our wealth to make a positive impact on the world.
Right, he's a big believer in charitable giving.
Right, he is. Robbins sees it as not just a moral obligation, but a source of joy and fulfillment.
Okay.
He talks about finding a cause that truly resonates with you and supporting it in a way that feels meaningful.
It's about aligning your giving with your values, making a difference in a way that feels authentic to you.
Exactly. And he even gives some creative ideas for amplifying your impact, like using crowdfunding platforms to leverage the power of social networks.
Oh, I love that. It's about taking that unshakable mindset beyond our own finances and using it to create positive change in the world. This deep dive has been such a rewarding experience.
It has.
We've covered so much ground, from the mechanics of investing to the importance of emotional well-being, estate planning, and even charitable giving.
It's been a real journey. Robbins has given us a comprehensive blueprint for not just financial freedom, but a life of purpose and abundance.
Right, and he ends the book with a call to action, encouraging us to take one step, no matter how small, towards building our unshakable future. What resonates most with you? What action will you take?
That's a powerful question. The journey to financial freedom is ongoing.
Right.
It's about consistently making small positive choices, just like those consistent investments we talked about.
Right.
They compound over time, leading to incredible results.
Absolutely. Thank you so much for joining us on this deep dive into Unshakeable. We hope you found it insightful, empowering, and maybe even a little life-changing. Until next time, stay curious, stay informed, and keep diving deep.